Let's go now to our friend Connor Finemore from Galaxy Trading. Connor, welcome back to Galaxy Brains.
Thanks for having me, Alex.
It's been an exciting time, obviously. I know our audience has been watching closely. The world has been gripped to the markets, to the televisions, to the truths from the president. I think before we talk really broadly, we're recording on April 9th, Wednesday, around 11 a.m. Eastern. Overnight, the Treasuries, 10-year Treasury, rose from, all the way as high as 4.5% yields. That had a lot of people spooked. It's come down a little bit. There was some chatter that perhaps like the basis trade is unwinding. No one, it seems, really knows. What's your take on that?
Yeah, I mean, I will say that firstly, I'm not. I'm definitely from the equity side of the world. Unfortunately, BIMNET's probably the perfect person to ask this question. But I think that a lot of the fear from the price action is who's your seller, right? Is it foreign governments that are trying to use this as a weapon of negotiation? Is it broad deleveraging in the U.S. financial system? Is it the fact that as firms sell equities in their margin accounts, that the offsetting treasury needs to get sold? So just general deleveraging in other parts of the market, because each of those outcomes or each of those drivers has a different level of fear to it, right? And the biggest one being foreign governments, really China, and maybe some of our closer trading partners like Japan being big sellers. That spooks some people. On the flip side, there is some conversation that some of the selling is coming from very friendly nations like Switzerland, who may be selling long end treasuries to buy the dip in equities, right? They view their central bank management a little bit more actively, and so that might be something to be less concerned about. But definitely over the last 4 days, the size of the moves, and even the size of the intraday moves on Friday, 10s had moved 20 basis points and finished the day basically unched. It's really hard to do anything in that environment.
Yeah, you had pointed out that something like the Thursday, Friday, Monday, Tuesday was the longest streak in intraday 5% moves. Was that right?
Yeah, so it's the 4 days in a row in the S&P of 5% intraday moves. There are 4 periods in history that's happened: 1987 crash, 2008 crash, 2020 COVID, and the last 4 days. And so I think when I was on the podcast with you last, the two main market thoughts that I had shared were that I thought index vol was cheap with VIX at 17, and I thought that crypto would trade with equities. And I'm gonna say that VIX is north of 40 and has been for the best part of a week. And unfortunately, crypto has been trading with broader risk, which is a function of positioning. It's a function of where do you hide. It's a function of hedging my book. And so Bitcoin here is at 77K. I think when I walked away from my screens, and it could be a real come to terms moment with Bitcoin, with gold up 3% today. Which way is Bitcoin going to trade over the next 12 months? Are we going to trade with gold, or are we going to trade with risk assets?
Yeah, it is a big question. And you can imagine, I mean, I've been talking about this for years. You can imagine that if you are, let's say, a foreign government or a foreign person looking to find a store of value, gold is good. It works. It's old, but you can't move it. I mean, to me, that's the core issue with gold, right? It's not transportable at scale. So you can't move $1 billion of it in 10 minutes around the world like you can with Bitcoin. I wonder if this will be the time. I do believe on a long enough time frame, eventually the world will agree with that, and Bitcoin will be a gold-like non-sovereign store of value. But I agree. This is a time when it would be great if the world had that as an outlet and agreed upon that as an outlet, and it hasn't yet. But at 77,
I think non-sovereign's the right point, though.
yeah,
I mean, sovereigns can hide in gold all they want, but if you're an individual, you've got to have your money in something.
yeah, and you can't have like
And
giant piles of gold bars under your bed. It's just simply not going to fit.
right. And we're fortunate in the US to have such a strong legal system that it's part of the reason that our assets are so valuable. But in the event that there's some deterioration of that, where do you go? Where do you hide? And so that could be sort of taking it back to rates and to tens for a second. That could be part of the reason that we have seen a sell off in the back end is people globally, not Americans, people globally are saying maybe this isn't the safest place for my money anymore. It's a scary thought, and it's probably way too early to be having that conversation. But we're reacting to the price action that we have.
Yeah, I think there's some. It makes sense. I mean, you buy treasuries or sovereign debt. It's partially a bet. It's significantly a bet on the ability of the sovereign to be stable and pay the debt off. And I would say it's fair to look at United States policy at the moment and say that it doesn't look stable, right? I mean, it doesn't. That doesn't mean it's gonna, collapse. That's the end of America or anything. But in this moment, there's so much uncertainty. What do you make of the uncertainty on trade and tariffs?
No, I think that right now there are different factions within the Trump administration that have different stated goals. And I think it's the first real ideological point that they're clashing on, right? So you've got Bessent's 333, 3 million barrels of oil, 3% deficit, 3% 10 years, right? You've got Musk, who wants to cut the deficit with Doge. He's got his own business interests. He actually manufactures a lot of things in the U.S. and has been a very pro U.S. Manufacturing investor for a decade. You've got Navarro as a China hawk, and then you've got the Cass, Mirren, Miller, um, American worker, American exceptionalism, um, protectionist thing, right? And those can't all exist together, right? The reality of tariffs are we're going to have real growth slow down, and we're going to have inflation higher, and that dynamic does not fit with cutting the deficit, right? Because you raise revenues from GDP and you pay your costs at whatever the market rate is. And so it's really hard to square those two things. And there is going to be a point where um, something has to change, right? The Trump administration wants to raise revenue with tariffs. So in their minds, that's meant to help the deficit. But part of the story that has been told is that we are going to grow our way out of this problem. And it's degrowth by nature. And you can look at the copper price, you can look at the oil price, you can look at stocks. All of these things are trading degrowth. And so that's just there's something that has to change in that environment. And I don't know if it's, doing a really good deal with your allies, getting Europe to spend more on defense, getting Japan to, close the trade deficit some, trying to negotiate with those counterparties and then working on China later. That seems to be the natural path forward where it's the least saving face, I guess, way to do it. But it's really hard. I think we're all asking the same questions, and anyone that's very confident in what the best way forward is probably overconfident.
Yeah, it's really weird to think back to Liberation Day last week, and look at the tariffs that were imposed or announced, which were really, some math around the actual just trade deficit. And I get it. The president has been a critic of our trade deficits and import export ratios for decades. But you have the reciprocal tariffs on one hand, whether they're monetary or non-monetary trade barriers. That sounded okay. I feel like the market was pretty well conditioned to accept that after several months of drumbeat, and that may be unfair. But when you look at the trade imbalance and call that unfair, isn't that literally the price we pay for exporting dollars around the world and being the global reserve currency? It's not just the price. Isn't that the deal we agreed to?
Well, and we like to be consumers. I mean, it's great that I get to sit at my desk and eat Mexican avocados and drink mango smoothies from India and use technology that's manufactured in a dozen countries before it gets in front of me for less than $1,000. Like, for the consumer, all of those things are great, and shifting supply chains will make all of those things more expensive. So, the American ideology really revolves around that consumption. Um, that being said, the I think a lot of the ideological reasons behind why the deficits exist in the first place and why Trump wants to change that, being that he thinks that globally people have taken advantage of the things the US offers, which is defense, which is a super fair point. Um, it's just, I mean, and you know, 100 other people would have said this. It's just the manner that it was done in that is, you know, it's too inflammatory, right? Australia is such a great example. You know, they trade are a trade surplus, right? They buy more things from the US than they sell to us. And not only that, the goods themselves, they buy military equipment, aircraft, complicated machinery, farming machinery. And what do they sell to us? Steaks, lamb chops, iron ore. I mean, these are things that we love, right? And so not only is it one of our closest allies, a security interest for us because, you know, all sorts of military equipment exists there. They're, you know, a trading partner that in Trump's own framework is a positive trading partner. They still get a 10% tariff, and credit to them, their basic plan is we're not in the top 10 priorities, so we're going to sit quiet and try and be um, you know, as helpful to the Americans as possible while they deal with everyone else. So they'll probably work out just fine, but I think it's just a good example of maybe there are places where this could have been executed better.
Yeah. Last question here. What do you think is there a breaking point? Is there do we need a deal, a major breakthrough deal that then the Trump administration can point to and thus either secure more deals on the back of it or back off, take their foot off the gas, or and that maybe that's the sort of that's the optimistic case. The pessimistic case is there a level on the S&P or in the other direction on treasuries where like they have to change policy? Like where's the you know the Fed put, where's the S&P put here that's gonna you know put a you know tell the administration that they've broken too much, or is there one in your
I
mind?
mean, I think there's probably a level in 30s where Powell has to stop balance sheet runoff. That as a bare minimum. I think probably there will be a level where, you know, mini QE, like mini bank crisis 2023 type policies can come in, some sort of emergency facility, just so that everyone is comfortable that liquidity isn't going to be an issue. Um, there's not a lot Powell really can do because moving the front end doesn't help a ton here, right? It's one of the sort of points that I've tried to hammer on the desk. When you have degrowth and inflation, cutting interest rates doesn't help. And so, you know, there's limited things that Powell can do, but they're probably low hanging fruit. So if we spend any meaningful time above 5% in 30s, I think that, you know, they'll stop balance sheet runoff at the bare minimum. In terms of S&P, no. I think there are levels where people will start to look past this, but that I think will be the main lever to watch, and will continue to be very volatile. And I think that, you know, implied vol levels in equities are probably fair and will be sticky. Yesterday, actually, when we had that rally in the morning, people sold vol aggressively, and all of those people got smoked on that because we rolled, you know, 6% intraday. And so today, again, we've had a small sort of drift higher in equities, but vol has stayed very firm, and that will probably be the environment. Um, and then on the deal making part of the question, I assume that we'll get something from Europe um, that's positive soon because the Trump admin needs a win soonish, and the Europeans need to move their energy supply chain. So, like something like a big natural gas deal between the US and Europe seems like a very like beneficial for everyone, probably was going to happen anyway type deal, um, to sort of cool off that relationship. I think something from Japan and South Korea is going to come soon because they realize how close they need to keep the US with China as the global threat. Um, I don't know what's going to happen in China. It's really hard with like 104% or 113%, whatever the number tariff is. It's probably up 20% since I sat down here. Um, I don't really know how you trade in that environment. Um, so part of me wants to say because it's so hostile right now that it has to change, but maybe they both dig in. I really don't know.
Yep. Well, no one really does yet, and we're beholden to the headlines at the moment, right? That's where we're all watching, and hopefully we get some deals here so that all sides can take the temperature down.
I agree.
All right, my friend Connor Finemore from Galaxy Trading. Thank you so much.
Thank you.